Good afternoon and welcome to this edition of Stock Talk. I'm Nnamdi Obukwelu, joined by Shayne Laidlaw, and we are going to run through some restaurants and staples names and themes for you. If you have any questions, please submit them as usual, and we'll get to as many as we can. It's all yours, Shayne.
Perfect, thank you, Nnamdi.
Yep.
Let's jump to slide 3. We'll just get into a couple of our ideas lists here. First, on the restaurant side of things, on the long side, McDonald's, the best idea, one of the few restaurant companies that's reported a really good top line with some positive traffic. Red Robin, we're getting aftermarket close today, which we're looking forward to. It's getting beaten down recently as we've gone through earnings season, and a couple of companies have not been doing so well. So we'll see how their initiatives are affecting their business. And then Potbelly, the last on our long list on the restaurant side of things, disappointing fundamentals, but news out of this quarter that they've enlisted the help of JP Morgan to help them work through some things, which us, along with other people, have highlighted as a sale as a potential thing that'll come out of that. And then on the short side, top ones, Chipotle, which we'll talk about today, SHAK, Starbucks, and Domino's, which I'll touch on a little bit here. And then turn to slide 4, our consumer staples ideas list. Highlight Costco here. We have a few slides in the back on Costco. Love it on the pullback on the Amazon Whole Foods news, and then U.S. Foods reports tomorrow. Then on the short side, UNFI, still love it on the short side. Still think they have a lot of downside and a lot of risks driven by their dependence on Whole Foods, which is 35% of the business. And then Tyson, which reported a pretty good fundamental quarter, which surprised us yesterday, driven by a few different things across their segments, but we still think that the legal risks that the business faces are still the tail call on the bearish side. Turning to slide 5 and 6, just a couple overall restaurant macro charts from Black Box Intelligence here. As you see, sales for now 2 years have been pretty bad and negative, driven by lower traffic, which has not recovered as of late. I think you can point to a number of different reasons why traffic is declining, but I think we like to point to the oversupply of restaurants in the overall restaurant space, and with casual dining in particular being one of the heaviest affected sub-industries within the restaurant space. Turning to slide 7, appointment growth is slowing. I think we've seen this a lot. Although restaurants are still growing, they're growing to a little bit of a lesser degree, more expensive to build for build-out costs, harder to find good real estate, so we're starting to see a slowdown here. And also as the overall labor picture starts to tighten, the restaurant space is not immune to that either. Turning to slide 8, another thing that a lot of restaurants, or I should say the bad restaurants like to point to, is the gap between food at home versus food away from home inflation. This is closing now as you're starting to see grocery costs increase to some extent. I think restaurants have held pretty steady at the 2.2 to 2.4% inflation over the better part of this whole gap cycle. Turning to slide 9, let's get into some fundamental businesses here, starting with Shake Shack. They reported last week a pretty dismal quarter with negative 4.3% traffic growth. This is still on our best ideas list as a short. We continue to see them plant flags across the country and internationally, which is driving lower returns in the business. And I think longer term, they've always touted their 28% restaurant level margin as industry leading, although they do admit to some declines over time to a more industry average. I think they're still probably a little bit high on that, and I think they'll revert to the mean over time, as we've seen, as we've kind of calibrated other restaurant companies. Kind of the lower 20s is definitely more in the realm of where we see them being. But thinking about shorting this company from here, I think they do have 57% short interest right now, so getting in on the short side in a bigger way. Initiating position right now is difficult, although staying short we think is a good idea, as they're in need for probably a decline in traffic growth, or a decline in unit growth, or at least starting to more focus on regions so that they can build out their supply chain infrastructure and maintain higher returns on their business. Then slide 10, we just provided the traffic chart. Slide 11, we'll turn to the Cheesecake Factory. This was a long battle for us going short back in November of 2016. We fought the bullish wave in the overall market that picked up the restaurant sector and the XLY in particular. But this company just having negative traffic for 18 out of 19 quarters. We had faith that this was finally going to break sooner or later, and we got that this most recent quarter as they pulled down their full year guidance in a big way. And I don't think this was the last time they're going to need to pull down guidance. I think looking at traffic down 1 to 2%, 1 to 3% over the last 19 quarters, you have to think Are they growing in the right areas? Should they stop growing? I think that they're attached, 90% of their locations are attached to malls, albeit A malls, which are actually seeing slight traffic increases as provided by the retail team here. And so for them to still be having traffic declines, it points to either having too many units or they're not really the draw of traffic as they say they are. So still love the short here and still think that a big CapEx cycle is in store in order to improve both their four walls as well as their menu offering to improve their kind of take with the consumer and their space in the restaurants sector. Just turn to slide 12, we'll look at cake same-store sales. They have been positive for a while, but they just turned negative. So I think the answer here is that price mix is not the answer for longer term longevity of the business. So I think they have to rethink how they're doing things, and that's kind of why we're still staying short. And then just on slide 13, we figured we'd share with you the CPI dairy and related products. Inflation, it's starting to turn inflationary, and with that being a major component of their COGS basket, we think that'll continue to pressure margins longer term. Turning to slide 14, we'll hit on Starbucks. We did a deck on this a few weeks ago, just highlighting our short thesis, which I think we can sum it up to three primary points, is that food sales growth is slowing. Yep. I think this was we were somewhat wrong on this quarter, but I think the overall trend is still intact, that food growth is slowing. Management touts that they think they can get food to about 25% of sales longer term, but thinking about the four walls, they don't have a kitchen. They have 2 Turbo Chef ovens, and that's it to put all their food from. So it's a real bottleneck from a managerial perspective on how they can get more food. They have the Mercado menu piloting in Chicago right now, and there seems to be strong tests, but there's only so many cases that they can put in these small stores in order to drive food growth. It just doesn't seem like a good long-term prospect for the business. And then second point is concerns surrounding the new CEO. First of all, he's a tech guy. He came from Jupiter. He's been the COO. As the COO, his first initiative was to change the loyalty program. And as we've seen over the last few quarters, the change in the loyalty program had a detrimental effect on the traffic growth. So that wasn't exactly a first good initiative, and now we have Howard Schultz, the old CEO and current chairman. He's on conference calls, he's not on conference calls. I don't think he can really step away from the business. It's still his baby, and I think he's getting pretty defensive on it. But I think there's definitely some concerns you can highlight with the new CEO. And then lastly, technology is no longer a differentiator. We'll definitely give credit to Starbucks for being one of the best companies when it comes to technology, mobile order and pay. They were the first ones there. They have the best loyalty program in the past. That was the past. Now everyone is caught up. Everyone has mobile order and pay. And so that is no longer a true differentiator. I mean, even the independents have mobile order and pay through an app called Cups. So I think a lot of people are evolving, and Starbucks just doesn't have that as a differentiator anymore, so it's not driving traffic. And then just to highlight on 3Q17, so you have the 5% comp in Americas. We're still on slide 14. There was a lot of benefit in here from the unicorn frappuccino. I think we kind of chuckle internally when they say the unicorn frappuccino was a positive impact on the overall business. I think maybe from a revenue perspective in the near term, but I think if anything, maybe it was a detrimental effect on the actual kind of the perception of the brand. So we don't really like that and don't think that'll continue by any means.
Desperate now.
Yeah, desperate for sure. Slide 15, just a quick look. Nothing new here to say completely, but you have average check versus traffic. Average check is a component of mix, or mix is a component of average check, so you also have the growth of food in there as well, but there's definitely a lot of price within the check right now, which has driven slowing traffic and down to 0%. Because actually in the most recent quarter, I should highlight that, is that there was 0% traffic growth across all segments, so that is not good news. Slide 16, probably a result of that zero traffic growth is the slowing loyalty member growth. So sequentially you had 0% growth from 2Q17 to 3Q17, and these are the year-over-year numbers as you see a slow deceleration from 16.11 and then to 8 in the most recent quarter. So sticking with the coffee theme, but switching over to Dunkin', one of our other favorite shorts. Primary thesis on the short here is slowing unit growth as as franchisees continue to see lower returns driven by lower sales and lower traffic numbers that they've been seeing. They've been taking a lot of price recently. I think corporate has gotten a handle on this to some extent, but now they're pushing down increased investment in both inside the four walls as well as exterior remodels. So this is going to be an increased CapEx cycle for the franchisees. So thinking about how the franchisees are looking at their business, they're seeing somewhat lower returns on the fundamental side just due to lower traffic, and now they're being asked and somewhat forced to increase their investments in the four walls. So that will most likely lead to them reducing their overall unit growth outlook, which I think still has some room to go lower, in our opinion. Turning to slide 18, one of our favorite shorts, and God, it's been almost since my entire time at Hedgeye, Chipotle. They reported a couple weeks ago too, and actually just instead of slide 18, let's just go to 19 as a 2-year comp stack basis. You see no true recovery in the business. I think as people continue to point out new foodborne illnesses, whether it be in Virginia, we had the founder of iwaspoisoned.com in here last week, and he spoke to just widespread people reporting that they've gotten sick from eating at Chipotle. I think there's, to some extent, those are increased occurrences due to the fact that everyone thinks they might get sick at Chipotle these days. So if they do, they might blame Chipotle, but that exact mentality is what is going to stick with Chipotle for the longer term, and that's what's going to continue to inhibit their ability to recover completely. And then I think, sound like a broken record on unit growth, but they continue to grow into a slowing environment for themselves as well, and into an environment that the restaurant industry doesn't exactly need more units right now. So it's definitely a difficult environment, and the management team at Chipotle hasn't been able to kind of get a handle on how to fix the trajectory of their business. Domino's, our newest short. We're holding a black book next week on Domino's. We provided a couple same-store sales charts here in the deck, but I would highlight increased competitive pressures as a primary reason that Domino's pizza business is going to continue to slow. I think this is highlighted and has already come to the surface in the UK in particular, where delivery services such as Deliveroo and Takeaway.com have built up a delivery network that is far superior than the US is right now. The US is getting up to speed through the help of Uber Eats, and then Postmates as well, and then you have other players all coming after Domino's business. So their thought process that people choose that they want pizza and then where they want it first, I think, and we think is misguided. And I think people really think, all right, I want takeout, what should I get? I think that's going to be the new mentality of the future here. So Domino's business is going to continue to be pressured longer term on that overall macro factor. And then let's just switch quickly to our favorite long on the consumer staple space, a company that it's having a great day today. It's seen a strong recovery since being beaten down after Amazon Whole Foods announced their merger, but I think there's still a lot of room to go higher. Just looking at slide 23, they got really slammed for no apparent reason. The deal's not even closed. People have a misconception, and we'll just skip to slide 25. People have a misconception that Amazon is so much cheaper than Costco and so much cheaper than everything else. I mean, maybe it's more convenient, but it's just not cheaper. And just from this small basket of items, you can see that it's roughly 22% cheaper at Costco. And this is driven by the fact that Costco is able to offer larger pack sizes, which is beneficial from a manufacturer point of view. I guess you get less pennies per box, but you're selling a lot more boxes because there's less competition within Costco. For shelf space, given there's only about 3,700 SKUs, so they're not fighting on the shelf side by side with their competitor. They're usually the one and only thing. I use the example of Annie's mac and cheese, just being, if you're Annie's mac and cheese and you're in Costco, the likely only competitor to you is going to be Kirkland. So you have private label competition, but that's not going to take out your business, and you're not fighting against too many other players. And then just switching back to slide 24 quickly, I just want to highlight membership as one of Costco's strongest assets, and how it's been steady as it goes. I think as they've been building out from the course of 2010 to current, they've been building a lot of increased benefits for their members inside the stores. And I think you see a slight kind of dip from 90.5 to 90.2 from the announcement of Citi Visa, the new Citi Visa card, to the launch of it, and then now the membership fee increase. This is all a cycle. This happens every time they do a switch like this. And as it gets rolled into the business, it'll change over time and they'll revert back to a higher renewal rate, because they're not just taking this all to the bottom line. They do invest back in the business and they provide more for the members, so they try to add as much value as they're taking. And I think I just highlight something about their members is that this is a higher average annual household income member than a typical member. You see Amazon going towards subprime memberships, and Costco's at that about $150,000 a year household average income. So I think looking at their membership base versus others, theirs are much more likely to be able to ride through an economic wave more effectively or unscathed. And then turn to slide 26, just highlighting a short on Kroger. Obviously their MPP issue is one of the biggest components of our short thesis. We've talked about it a lot. It's gained a lot of interest as we have kind of brought it to light over the last year. I think looking at their potential withdrawal liability being equal or greater than the equity value of the company makes them really tied to these multi-employer pension plans, which are on a year-on-year basis increasing in costs and inhibiting their ability to invest in their business to effectively compete with Walmart's, Aldi's, Laidlaw's, and all the other players in the conventional market. And then thinking into the future of food retail and how price competition is going to continue to increase, a conventional player in the middle market like this that has this weight on their shoulders, which is MPPs for Kroger, it's going to make it very hard for them to invest effectively and to be able to compete on price with these players that are going super low, utilizing private label. And then you're also going to have Amazon lowering the prices at Whole Foods as well, which is going to bring down the higher end supermarkets price level. And you already saw the private equity company do this with the Fresh Market over the last month, so they're kind of rebasing what that store is going after. You're going to see Amazon rebase Whole Foods. So this whole market is shrinking downward, and that's really going to affect a middle market player like this that is not going to have a lot of dry powder to invest in that with all the increasing costs from the MPPs.
It's fast.
17 minutes.
All right, so thanks for that, Shayne.
Yep.
Great job. So now we're going to move to some rapid fire questions. So these are just like last time, really fast.
I'm ready.
1 second, one word answer.
I won't make that McDonald's French fry mistake again.
All right, so the first question is organic just a phase?
No.
Your favorite burger joint?
Five Guys.
Five Guys. Your least favorite burger joint?
I just don't like Burger King.
Don't like Burger King. I'm same
I
boat.
don't.
Can't do it. Do you think SHAK's plan to open new units is too aggressive?
Definitely too aggressive. They need to focus on building out markets instead of planting flags.
Beautiful. Which subsector in the restaurant space are you most bearish about?
Casual dining.
What about bullish?
Higher end fine dining, steak chains.
Fine dining. Awesome. Who is Domino's biggest competition, specifically on delivery?
Specifically, I think maybe you look at Uber Eats, but then zooming in a little bit more, I like the McDonald's play as being a bigger competitor for them, thinking about like a late night order occasion. Like what do you do late night? You used to do Domino's, but now you can just order 3 burgers.
Yeah, that's a good point. Do you think Starbucks will ever get food right?
Can they? They don't have a kitchen. I mean, right is, maybe that depends what right means to somebody.
Like it just depends how long you're willing to wait for that food.
Yeah.
You know?
Depends what kind of quality you're looking for.
What kind of quality you're looking for, yeah.
If you want it out of a box, I think maybe it's already right then, but
right
it's not that good.
It's not good at all. Is the coffee shop concept dead?
Definitely not. Still well and alive. I think. I guess I'm rooting the rapid fire aspect of this, but I think the coffee shop aspect is still well and alive, and you see that from independents continuing to grow and still prosper in this environment.
Gotcha. What's your favorite long in the staple space?
Costco.
It's restaurant space.
It's tough. I like McDonald's. I like McDonald's longer term. Maybe there's some more percentage increases on some other items that maybe, like Potbelly if it gets taken out. Like there's 30% right there. But I think I like McDonald's as the safest and with the most potential upside.
Okay. Perfect. Good job. That was good.
Is that it?
That was a rapid fire.
Oh,
Now we're
good.
going to go to the submitted questions.
Not too hard this time.
No, it wasn't bad. So company that actually reports tonight, Red Robin, what are your thoughts on Red Robin?
So many people have been
for
asking
the
us
print.
about Red Robin.
Yeah.
I think trying to guess what their comps are going to do going into a print is somewhat like gambling. I think
Yeah.
the overall casual dining industry has been pressured, but I think, and our long thesis is that they continue to invest in initiatives that are going to differentiate them from the overall restaurant space. So I think consensus isn't too high on this name. I think they still loop them in. I mean, they are a casual diner, so they still loop them in with casual dining, and they've been beaten up over the last couple of weeks because of it. And I think their initiatives they have in place differentiate them from the rest of the pack. So it's not going to be some blow up. I don't think that's like it's not going to be like a Cheesecake Factory. I don't think. I think it's going to do better than that.
Okay. Awesome.
I'm not going to try to guess a comp number around here.
I can do it.
No.
All right. So going back to Chipotle, will they ever get it right as far as getting people sick, not getting them sick?
Well,
It's just
I think
the nature of the business.
management needs to get themselves right first because they have they're so disconnected from the business. It seems like they have no control over anything.
Yeah.
I think their lack of control or their lack of maybe interest in the business has kind of trickled down all the way to management level teams within the stores, which has gone to line level employees, and this is how you're getting people like literally just not washing their hands correctly.
Yeah.
And that speaks to upper management and just a trickle down effect.
rolls
So I
downhill.
think there's a lot that needs to happen up top before the business can ever be fixed.
Gotcha. So one person wants to know if we can run through our Costco thesis really quickly. I don't know if you want to.
Did they ask that question before or after we gave them 3 slides?
This was before. This was the first
well.
question in there.
Maybe we'll skip that then.
Skip it. Yeah, they'll go there. Actually, can you expand on your thoughts on Potbelly, please?
Potbelly. So I think we looked at this company as somewhat of a turnaround story. I think now they don't have a CEO right now, so there's not a lot of fundamental things that can happen at the business. I think they probably wait on like a refranchising plan until they got a CEO. So now with JP Morgan on board, kind of points to a sale, I think. I think you don't need a CEO to sell a company.
No,
the board can make that decision. So so that's kind of the current thesis right now. Obviously, fundamentals are still challenged. I think they still need to move. If a sale's off the table, they still need to think about going to a more franchise-heavy business and putting the onus on franchisees to invest capital in the business. And then they kind of pull back and kind of just focus on initiatives that they need to do to improve the business, whether it be menu innovation or marketing or things like that. But I think it's in the hands of some private equity companies probably right now.
Got it. Next question, what's the latest on UNFI?
UNFI, obviously it's got beaten up a lot initially since the activists took a stake in Whole Foods, and then even worse when Amazon bought Whole Foods or announced the acquisition of Whole Foods. I think longer term, this business is just going to be challenged on price. They operate in a very low margin industry, and an industry that is increasingly getting more competitive from a conventional retailer standpoint or a conventional distributor standpoint. So you have C&S wholesale, you have Super Value encroaching on natural and organic goods. So that's pressuring them, and they're also looking to acquire natural and organic distributors as well. So multiples could be going up from an acquisition standpoint, which is one of the primary sources of growth for these distributors as they further consolidate the industry. So I think that's a major component of still why we're short, and I think the other major component is Amazon getting their handle on Whole Foods. Yes, they have a contract, or UNFI has a contract with Whole Foods going through 2025. We get that, and there's not currently a distribution network that Amazon has or Whole Foods has that can completely handle the distribution that UNFI does right now for Whole Foods. But that can happen over time, and as Amazon increasingly invests in food, distribution is going to come along with that, and that could affect UNFI in the longer term. And then in the nearer term, it can just be continued price pressure because this whole industry is focused on price right now, and you have private label rising to the top and increasing their percentage share in certain categories. So there's a lot of things that can go wrong with the UNFI business longer term.
Awesome, perfect. going back to restaurants, you talked about this a little bit in the deck on technology. So this person wants to know who's leading in the space from a technological standpoint, and what's the next big thing?
Wow.
That's hard. That's a good question.
Yeah, I like that.
Yeah.
I still think Starbucks is leading. Do you think differently?
I agree with that. Yeah.
They were the first mover advantage, so they
Yeah.
still have one of the best technology platforms, and it's very seamless from a mobile order and pay perspective,
Yeah.
getting up to the register and reloading your card and everything like that.
Yeah.
I think who will be the best, I don't want to say a restaurant company will be the best. I think Uber will be the best.
Yeah.
They do have,
Yeah.
they hire the entire Carnegie Mellon robotics team
Yeah.
in order to get autonomous vehicles going.
Yeah.
So this just isn't going to be autonomous vehicles, it's also going to be land drones as well.
Yeah.
And we've seen from early testing in, I think, Philadelphia, DC,
Yeah.
and over in the UK,
Yeah.
these drones are pretty effective, and this is one of the key components to making delivery economically effective for all parties involved, consumer, the company delivering the food, and the restaurant companies. So I think one of these technologies companies will probably be the ones to get it right
Yeah.
and advance the industry even further.
From there. Awesome. Perfect. That's the last one.
Sweet.
Great job. Thanks for your time today, and join us next week at 2:30 for the next edition of Stock Talk. Have a good day.